Hi, everybody. This is Ellman, the Blue Collar Investor, welcoming you to this BCI podcast number 69, titled Technical Charts. A picture is worth 1,000 words. And we're going to use a real-life example with the Wendy's company, which trades on the NASDAQ exchange under the ticker symbol WEN. Now, the technical analysis represents the second of the three required skills as it relates to the BCI methodology. The first one is stock selection. What underlying security are we going to use for our option sales? Second one is technical analysis, which is what we're focusing in on in this particular podcast. The third one is position management, or how to manage our trades via exit strategies after we've entered our initial option selling trades. So once again, we're focusing in on technical analysis. Now, the four parameters that are used in the BCI methodology, and of course, feel free to use your favorites, but I'm happy to share with you the ones that I've been using now for more than 2 decades as it relates to short-term option selling. And they are: we look at exponential moving averages, the 20-day EMA and the 100-day EMA. Now, exponential moving averages are different than simple moving averages in that the more recent prices are weighted more heavily in the trend lines. So for short-term option selling, it's important that we get those lines moving quicker because we only have short-term obligations. We'd like to see an uptrending moving average with the 20-day, the shorter term, higher than the 100-day, the longer term. And we'd also like to see the price bars or the candlesticks at or above the 20-day EMA. The second parameter we look at is the MACD histogram, moving average convergence divergence histogram, which are blue bars, like a bar chart. And we like to see those bars above zero and ascending. And that gives us an idea regarding trend and momentum. Now, we use another momentum indicator, the stochastic oscillator, which we also like to see uptrending. And we like to see it moving from below the 20th percentile to above the 20th percentile. And finally, we look at volume to confirm any of the other parameters changing direction. And also, we look for volume divergence. So, for example, if the price of the stock is going up but volume's going down, that could be a red flag. So those are the four parameters that we use in the BCI methodology. Now, I want to take a look at a technical chart for Wendy's Corporation, first from September 2018 to July 2019, then after July of 2019. So if we looked at that technical chart, we would see that regarding the exponential moving averages, we would see that the 20-day EMA on the right side of the price chart is beginning to move down. That's a bearish signal. We would also see that the price bars are beginning to move under the 20-day EMA, another bearish signal. Now, if we looked at the MACD histogram, the trend and momentum identifying indicator, we would also notice that the blue bars are moving below the zero line and moving further and further away from it. Another bearish signal. And finally, the stochastic oscillator, we see moving from the 80th percentile to below the 80th percentile and then trending down. At the very, very far right part of the chart in July of 2019, looks like it's beginning an uptrend. And we see the volume is average volume. So we could take those parameters and consider them reliable. Now, what happens in July of 2019 was that Wendy's had a very, very favorable earnings report. And that earnings report resulted in a gap up of the price. And all the moving averages turned from bearish to bullish. So we would see now that the 20-day exponential moving average turned up dramatically. And the price bars were above the 20-day EMA. So those were two very bullish signals. Now the MACD histogram bars moved back up above zero and stayed that way solidly above the zero line, another bullish signal. And we can see that the stochastic oscillator motored from below 20 to above 80. Now, that could be considered overbought, but I've seen securities stay in overbought for months and months and months. So at the point in time where we created this chart through September of 2019, we have all bullish signals, and the volume actually picked up a little bit, confirming these bullish signals. So you could see the two sides, the bearish side, and then after the earnings report, the bullish side. So post-earnings report analysis showed a gap up, and the price chart is saying buy, 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 and this is a security that if it meets our calculation initial time value goal range, then that's a security we should give strong consideration to. And it became a viable underlying because of this technical perspective. Of course, it also has to meet fundamental requirements, but one would think with such a favorable earnings report that it's more likely than not that it did. So from August 7th, 2019, starting with the post gap up, through September 9th of 2019, Wendy's actually appreciated from $18.75 a share all the way up to $22.25 a share. We could have written out of the money covered calls and done very, very well with this security. So let's summarize, folks. Price charts do tell a story regarding trend and momentum. Remember now, this is the second of the three required skills. So that means Wendy's would already have to have passed that fundamental requirements. Now, this type of technical analysis does alert us to certain events that can influence how we manage our trades. In this particular case, everything turned around on the earnings report. And that changed the entire technical picture of the Wendy's call. Now, let's face facts, and this is one of the reasons why one of the most important rules, one of the few rules, most everything else are guidelines, in the BCI methodology is to never sell an option if there's an upcoming earnings report. You can, if you'd like, own the stock through the report if you have a lot of confidence in it, but don't cap it by writing that covered call. Wait till after the report passes. But again, the facts are that a disappointing report could just as easily have created a gap down. So be very, very careful as it relates to earnings reports. So before I finish this podcast, I want to remind everybody that our website, www.thebluecollarinvestor.com, has a myriad of free resources. Please take advantage of these. You'll find them very valuable in enhancing your option selling returns. Look for the free resources link, including the Ellman calculator, on the top black bar of our web pages. We have a free beginner's corner tutorial for covered call writing and selling cash secured puts. We have a myriad, hundreds of articles that I've written over the years. We also have we have a calendar of events that I'll be participating in. So have a look on the website and take advantage of all these free resources. We also have a huge amount of educational products in the bluecollarinvestor.com store, which includes online video lessons sold individually and bundled. We have books in various formats, including PDF or ebooks. We have soft covered, and some of our books are also available in hardcover editions. We have calculators and spreadsheets that we've created over the years, a trade planner, and online mentoring programs as well. So have a look at the bluecollarinvestor.com store, in addition to all the free resources located on our website. Ladies and gentlemen, I want to thank you so much for taking the time to listen to this BCI podcast, number 69, Technical Charts. A picture is worth 1,000 words. Hope you enjoyed this presentation, and most importantly, I hope it puts cash in your pocket. As always, this is Ellman, the Blue Collar Investor. Take care, everybody.